It's time now for top picks. Got some lesser-known names. Interested in these ones. XPO Logistics. Let's start with that one.
So recently, the transports have started to outperform the market. That's a good sign for the economy, by the way. And within transports, we really like companies that are disrupting things and that are benefiting from some of the key themes. XPO Logistics is a company that does logistics, fulfillment, and helps customers get their product from their plant ultimately to their clients and customers. XPO is a technology-based company. They've got about, 1,700 coders working on building technology solutions to become more efficient. The company's grown very, very nicely. Organic revenue growth is about 10%. They've made very good acquisitions along the way. Stock's trading at 107. Had very little pullback in the recent correction, which sets up a logical stop loss that's not too far from where we are now. So I'd pay 107. I'd use $95 as a stop loss. It's a $13 billion company that is one of the strongest performers in the transport space.
Interesting name. Street loves it. 17 buys, 1 hold, and 1 sell on XPO Logistics. Your next pick is Intuitive Surgical.
Staying on the theme of companies that have disrupted their industries. Intuitive Surgical, many people will know, is a company that builds robotic-assisted surgical devices. So they can do remote surgery or minimally invasive surgery using these robotic devices. They sell them to hospitals. 85% of their revenue is recurring revenue. Then they sell devices that attach to these robots, and they are disrupting companies like J&J. So this company's been growing steadily for like 20 years. They've got good international exposure, and you may have seen a video on YouTube where their robot sews the skin back on a grape.
Really? Wow.
Really,
that
it's
precise.
very, very impressive, and the outcomes have been much better than those done by hand.
Now, in terms of Intuitive Surgical, is this a bit of a demographic play as well? We know the population is aging and we need more and more repairs to our bodies.
Absolutely it is, and the outcomes for things like knee surgeries and so on are very, very good. It's very minimally invasive. Stock took out a new all-time high today. It was up 8% today. We've owned it for some time. I think it's great to find the first companies to break out to new highs after corrections. Tells you those companies are leaders within their group, and the medical device sector is very, very strong. You can buy the whole sector buying IHI, which is the ETF that owns a lot of companies like Intuitive Surgical, and iRhythm that we spoke about earlier today.
All right, and the third pick is Hess Corporation. What do you like here?
So when a sector's been out of favor for a long period of time, invariably there are companies within the sector that have had great changes while nobody was looking. And Hess is a company that has had probably the largest new oil find in the last 20 years in Guyana. So this is one of the biggest E&P companies, or exploration and production companies, in the U.S. Their big find is in Guyana, and this is something that will play out over a few years. They'll be cash flow positive from that probably by 2020. But in the meantime, they have great assets that have grown nicely that supply the cash to do it. Stock's been very strong since middle of February, and it's had a nice trend reversal. I think it's really interesting that nobody today called about an energy stock, and it's been the best performing group in the last 2 weeks. It tells you where sentiment is on energy. So you can buy some great companies that are making nice technical turns, that have created lots of value through the downturn, like Suncor buying great assets through the downturn, that look as though they're coming out into this rally as one of the leading groups.
In terms of that sentiment, and you were discussing that earlier, and in fact you found it interesting, people weren't calling about these companies. What, a bit of a once bitten, twice shy kind of thing? It's been a rough couple of years.
Absolutely. I mean, listen, when you burst a bubble, you'll have a 2/3 decline, which is what happened in energy in 2015 into 16. You'll get about a 50% bounce, and everyone gets back on board, and then it runs out of gas, and it has another plunge like we did in 2017. So it is twice bitten, 3 times shy. And but having said that, I don't think it's a straight up move. I do think there's going to be pullbacks. You know, these have gotten a little extended in the short run. They could pull back, but I would say that this is a group you have to be taking a look at right now.
All right, David, always a fascinating hour when you join us. Thanks for being here.
Thanks for having me, Greg.
As always, please consult a qualified financial advisor before you make any investment decisions. We thank you for joining us, and we hope that you come back and join us again tomorrow here at BNN.